Bank reconciliation is a cash control method of comparing and noting between the bank and the cash balance. So what is the purpose of bank reconciliations? Just as it is important for a business to record all of its transactions, it is even more important that all the transactions are accurate to avoid violating the accounting principles. Most big businesses hold their cash in banks for security reasons. If the numbers between the bank statement and the income statement do not balance, the figures on the business's income statement could be misleading and the business could be accused of bad accounting practices and lose potential investors. When performing bank reconciliation, there are three main steps. The first is reconciling the bank balance. The cash balance generally won't equal the bank balance, and there are a few reasons for this. Deposits in transit that have not yet cleared the bank is one reason. Simply, this is cash that has been received and rightfully reported on the balance sheet by the business, but it has not yet been put in the bank statement. This is an addition to the bank statement, so you will plus this number onto your bank statement. Second is outstanding checks. These are funds by an individual or business in their bank account that have not yet been cashed or deposited by the payee. These are just subtracted from the bank statement as it is money leaving the bank or leaving the business. The third reason is errors made by the bank. Although this rarely happens, there are two ways it can occur. There is either an overstatement of an account or an understatement of a cash account. If there is an overstatement of a cash account, you subtract the amount that should not be there to bring it down to the actual amount. If it is an understatement, you simply plus it to the account to bring it up to the right amount. Step 2 is reconciling the company book balance. This is where the company adjusts their books to match the bank's. There are three reasons why they may not match. First, credit memorandum. This is where the bank collects cash on behalf of the company. This collection is either receivables or interest on notes. It is in addition to the company's book balance. The second reason is debt memorandum. This is usually incurred costs that have been written in the bank statement that the company does not know of. These are usually fees charged for bank services or dishonored checks. This is subtracted from the cash balance. The third reason is errors made by the company. This is either an overstatement, if so, they subtract the amount, or it can be an understatement in which you plus the additional amount. The third step is adjusting the cash balance. There are three steps to do this. Firstly, after both records have been fixed, the cash balance must be adjusted by reconciliations. Secondly, record all journal entries necessary to adjust the company's book balance to the actual cash balance. Thirdly, create a general journal based on credit and debit memoranda and errors identified during reconciliation of the company's balance.